Before we get into this, a quick intro for anyone new here. I'm Paula, and on this channel I try to step back from the noise and look at why markets move the way they do, what's driving behaviour, capital and decisions underneath the headlines. 2025 has been one of those years where on the surface, crypto looked fragmented. Different narratives rotate in and out. Some older coins suddenly outperform. Some very unfashionable parts of the market quietly do well. So instead of running through a list of top coins, I want to walk through why certain moves made sense in this environment and what they tell us about how the market is evolving. Because when you line everything up properly, 2025 actually has a very clear internal logic. Markets respond to pressure. And in 2025, pressure showed up in a few consistent ways. We had ongoing geopolitical tension, much more open discussion around de-dollarization, higher for longer interest rates, and increasingly explicit financial surveillance. At the same time, there was a growing gap between real yield and incentive-driven yield. Those conditions don't create clean, euphoric trends. They create rotation. Capital moves between different tools depending on what problem it's trying to solve at that moment. That lens makes the major moves of 2025 easier to understand. One of the strongest performers of the year was MyX Finance. At a glance, it's a derivatives platform, and leverage is clearly part of the story. But the timing matters. Large parts of 2025 weren't defined by strong trends. Markets weren't collapsing, but they weren't trending cleanly either. In that environment, spot exposure becomes blunt. Derivatives become more attractive because they allow traders to express shorter-term views with precision. MyX benefited from that shift. What made the move convincing wasn't just price, it was participation. Open interest increased, volume expanded alongside price, and traders were adding exposure rather than simply rotating internally. There was also a growing focus on upgrades that improved capital efficiency, something derivatives traders pay close attention to. That combination points to active engagement, not passive speculation. At the same time, this kind of utility is very specific. MyX worked because it solved a problem the market had at that moment. It didn't need to be timeless. It needed to be relevant. That pattern shows up repeatedly across the year. Another area that performed strongly in 2025 was privacy. Assets like Zcash and Monero had meaningful moves, and privacy-focused infrastructure such as Aztec Network began attracting renewed attention. What stands out here isn't price, it's how usage changed. In Zcash's case, the proportion of supply being used with shielded transactions increased significantly and remained elevated because it points to a shift in behaviour rather than a temporary surge of interest. The broader context explains why. Most blockchains are transparent by design. That transparency is great for verification, but it also means financial behaviour becomes permanent public metadata. As transaction monitoring became more explicit in 2025, the trade-off between transparency and discretion became more relevant, especially for anyone moving size. For retail traders, privacy is often used as a buffer layer. Funds move from an exchange into self-custody, pass through a privacy layer, and then continue on. Not to disappear, but to reduce permanent attribution and avoid financial history becoming indefinitely exposed. It's about flexibility rather than concealment. For large players, discretion has always mattered. In traditional finance, positions aren't broadcast in real time. On-chain they are, unless steps are taken to manage that visibility. Privacy systems that allow selective disclosure make it possible to verify information when required without exposing everything by default. That's why privacy began functioning less as an ideological statement and more as operational infrastructure in 2025. Price followed that adjustment in usage. Real-world assets are another area where language can obscure what's actually happening. When people hear RWA, they often think of tokenized real estate or collectibles. That exists, but it isn't what drove performance this year. RWAs are primarily about bringing real financial cash flows on-chain. That includes on-chain credit markets like Maple Finance, payment and payroll infrastructure such as Zcash network, and probability and risk pricing systems like Rain Protocol. These systems aren't built to generate excitement, they're built to integrate crypto with existing financial logic. For a long time, yield in crypto was driven by emissions and incentives. As interest rates remained elevated, that became less compelling. RWAs offer returns linked to underlying economic activity rather than token inflation. They also operate within structures institutions already understand. As a result, capital flowed in steadily rather than explosively. These systems aren't competing for attention, they're competing with traditional fixed income products. Alongside those themes, several long-standing networks continue to perform without much fanfare. Bitcoin Cash benefits when transaction costs matter and simplicity is valued. Tron processes substantial stablecoin volume, particularly in emerging markets. OKB reflected stabilising exchange activity and fee-based models regaining relevance. None of these rely on narrative momentum. They're used consistently, and that consistency showed up in relative performance. So when you look at 2025 as a whole, a pattern emerges. Different types of pressure favoured different kinds of utility. Leverage platforms when volatility mattered, privacy tools when discretion became more relevant, RWAs when yield quality mattered, and payment rails when reliability mattered. Rather than moving in unison, capital rotated between functions. Understanding that rotation explains why the year looked fragmented and why it actually wasn't. Before wrapping this up, it's worth touching briefly on custody because it connects directly to everything we've talked about today. A reoccurring theme throughout 2025 has been control. Control over assets, over information, and over exposure. For long-term holdings, I don't keep meaningful size on exchanges. Not because exchanges aren't useful, they're great for trading, but because custody and trading are two very different jobs. What I use for cold storage is Tangem. And the reason is that it removes a lot of friction people associate with self-custody. Tangem is a secure hardware wallet, but without seed phrases written down, without complicated setup processes or devices that feel over-technical. Your privacy keys are generated and stored inside the secure chip on the card or ring. They never leave the device, they aren't stored online, and there's no seed phrase sitting around waiting to be lost or compromised. That makes it particularly practical for anyone who wants true cold storage without unnecessary operational complexity. It also fits naturally with the broader themes this year: discretion, reduced exposure, and taking responsibility for custody. Right now, Tangem are also running a strong offer. You get $10 in Bitcoin for every Tangem wallet or ring purchased and activated. An extra 10% off with their New Year code. And if you stack that with my code Paula, you get another 10% off. I'll leave the link in the description if you want to look into it. So heading into 2026, the focus isn't on chasing the loudest narrative. It's about understanding where pressure is building and which tools become useful as a result. That perspective makes market behaviour easier to interpret, even when price action feels noisy. If you've seen my videos before, you know that we have set up the community in the Crypto Wolfpack. And if you want to know the exact strategies we use to make money in both the bull market and the bear market, we've made a completely free course for you. The link is in the description below. Before you go, if this is the kind of breakdown that's useful for you, this is exactly what I do on this channel. I don't really focus on hype cycles or consistent price predictions. I focus on why markets move, how different parts of the crypto system fit together, and how to think clearly when the noise gets loud. So if that's your style, make sure you're subscribed. I post long-form videos like this, shorter updates when something important changes, and deeper dives when there's actually something worth digging into. And if you found this video helpful, hitting like really does help more than you think. It helps the algorithm show this to people who are also looking for a more grounded take on the market. As always, feel free to leave a comment. I do read them, and lots of future videos come directly from questions people leave here. Thank you so much for watching, and I'll see you in the next one.